Okay, folks, welcome to the week ahead commentary for Saturday, February the 26th. Before we get to the charts, I want to talk a bit about TrendSpider TV. I did a presentation, I believe I mentioned this before, that TrendSpider approached me. They asked me to do some analysis on Bitcoin, which I did, trading strategies. I laid out a couple of trading strategies, correlations and whatnot to watch out for. And I did it a couple of weeks ago, and I think what I predicted is panning out pretty well. So it goes live at 12 noon today. I don't know whether I'm first. There's a bunch of guests. J.C. Parent, Rob Smith I know as well, Brian Shannon, Sarah Stratt. I'm familiar with them. A couple of these people I'm not all that familiar with, but we'll all be going live 12 noon today, Eastern Standard Time. I don't know when I'm up, first, last, middle, no idea. But check it out, TrendSpider TV. I'll try to remember to put a link in the members area of the website along with the email. So again, 12 noon today. I guess you could watch it on a replay as well. Okay, how was our week last week? Very, very good. And we took a lot of profits off the table on Friday, allowing for me to take my wife out, not be a lunatic, and to be able to relax and have a couple of cocktails, have a nice dinner. She's happy. I'm happy. All is right with the world. So now we could sit back and watch the charts and strategize about the new trading week and what we plan on doing. So before we can talk about that, we have to get a pulse check of the bond market and the equities market. So we'll begin with the 10-year yield weekly chart. A lot happened here last week, folks, and it can't be ignored. For the past couple of trading weeks, we have been rejected at this breakout point or the neckline of a head and shoulder setup. Left shoulder, head, right shoulder. I should say an inverted head and shoulder setup. Last week, what was different from prior weeks is that we broke out. This implies that yields are going up higher. What does this mean for the market? Well, the banks, they're probably going to need to get bought again. So they're certainly going to be on our watch list. We'll be buying back in at a lower price from where we stopped out at. What does it mean for growth stocks? They may have more upside to go here because some increase in interest rates is probably priced into many of these names. The however is, okay, what happens when we start closing the 10-year yield at 2.5, 2.6? That becomes a problem for many sectors of the stock market. So buckle up. I don't think volatility is completely dead. I think it's probably still going to come in some, meaning there's more upside for equities, but we need to acknowledge that yields are breaking out and longer term, that does not bode well for growth stocks. Inversely, bond prices, while they didn't break down last week, this is the 20-year bond ETF, the TLT, they didn't break down. They're threatening it, and I suspect we're going to get followed through to the downside if we get followed through to the upside on the 10-year yield. And as you might expect, we have a head and shoulder setup, left shoulder, head, right shoulder, and we are flirting with a breakdown of the neckline. The tips, weekly chart, rallied last week, but were rejected from a breakout point. We're probably going to get a pullback, higher low, and then a resumption of the rally. Volume was good. The dollar. The dollar closed up last week, but all up weeks are not made alike. You'll remember that earlier in the week, we were flashing a serious breakout, but by Friday, a rejection. To me, this has all the hallmarks of a blow-off top. Let's go to the daily chart. So here was Thursday's price action on Friday. We moved lower, giving up support. And this is really a sell the news event, meaning the Russian attack on the Ukraine. It was anticipated here. And then on the event, we sold off. You saw it begin on Thursday, follow through on Friday. And you saw that with gold, silver, etc. Even the VIX. The VIX was very strong in anticipation of a Russian invasion, and it sold off on the event. So weekly chart of the VIX, We hit a high of around 37.50, a lower high from the prior rally up into the 30s at 38.94, and we closed just off the lows of the week. So this is why I say that we're probably going to get a continuation rally in equities and a further pullback on the VIX. Daily chart, we did close at support. We are still in the mid-20s, so a lot can happen here. We're not out of the woods yet. We're like in the middle of a trading range on the VIX. And while the VIX was very, very extended last week, we held our nose, we stepped into the breach, and we were buying equities. And it paid off handsomely. FedEx, PayPal. So the lesson learned and validated, revalidated over and over again is that the key to profiting in trading options, equities, is to have that pool of liquidity. Be your own central bank. Have a lot of dry gunpowder to take advantage of really unique opportunities. The Dow Transports, bullish key reversal bar. Love it. It looks as though we want to move up higher. Now, I'll be talking a lot about the stochastics today, where the transports did flash an oversold reading on the Stokes. Many times you'll get a W formation like you had here. It didn't happen here. It was more of a U shape, but you had it here, here. So that means that we could still see backing and filling. It doesn't mean that we're going to go straight up higher. The Dow Jones Industrial Average, weekly chart. We didn't close positive on the week. So while we had a great rally Thursday, Friday, the Dow Jones simply couldn't muster enough buyers to turn it green for the week. And the stochastics are still down below the 50 mark and threatening to break down lower. So the question we have to ask ourselves throughout this commentary is this: do we break down to new lower lows, or is this a potential W formation forming and we're set to hook back up higher? From doing this a long time, this usually works out not very well for equities. We'll usually break down further. The S&P 500 weekly chart. It did close out the week positive, a serious reversal bar. The stochastics, same deal here is what we just spoke about on the Dow Jones Industrial Average. I won't rehash it, but this is a problem. Ideally, these Stokes would have begun to hook up down below the 20 mark with an oversold level, but they're not. They're pausing within a correction phase on the stochastics. Volume was good. Daily chart. So a great back-to-back rally. I think we're going to get follow-through. The question is, what happens when we hit 4,400, 44.50, 44.25? 44.25 pretty much corresponds to the T where this prior support level was. Can we muster enough dry gunpowder or enough rocket fuel to get through and recapture support levels? I don't know. I don't think so. Because remember, this stock market is still very, very overvalued. And what caused the stock market to correct initially was not Russia invading the Ukraine. It was the Federal Reserve raising rates. Remember, I just went over the bond market, the 10-year yield breaking out on a weekly time frame. And it's also concerned about inflation and the economy slowing dramatically. That has not gone away. This, in my opinion, is a relief rally, which is why I wanted to book profits, make them real. Volume is very good. You can't take that away. That's why I still believe that we have more upside to go here. But what happens when we hit resistance? That's the big question mark. Small caps. A beautiful reversal bar on the week. But as I just mentioned with the S&P 500, what happens when we hit resistance? Well, we didn't break out above it last week. We stalled. Do these Stokes roll over, putting in a lower high, or do we break out to new higher highs? These questions need to get answered before we could take on new big positions like we did with PayPal. Daily chart. Again, a beautiful back-to-back two-day rally. We have resistance up here at around 204. Volume dropped down significantly on Friday. The trip Qs, bullish Q reversal bar, we stopped at resistance. Volume, very heavy to the upside. Daily chart. Now, the trip Qs managed to recapture the 345 mark, which is impressive. Now, the question is, on a retest, do we hold it? And we also want to revise this chart to reflect this. We are in a downtrend channel. So do we break out above this upper band of resistance? Volume, very good on Friday. The banks. Another sector that couldn't close positive on the week, and I hate these Stokes. I mean, this is bad, and I just said earlier, and I'll acknowledge it, that I was thinking about buying the banks. This is going to keep me on the sidelines for perhaps a few days, because this is looking as though we're rolling over further, at least on the Stokes. Here's your downtrend channel. And we couldn't close positive last week, despite the breakout on yields. Big volume to the downside. But to be fair, we rallied off the lows of the week. So a lot of that volume was buying. Daily chart. So great volume on Friday, great price action. I don't see an urgent reason to go buying banks just yet. That weekly chart has me a bit spooked. Technology weekly time frame. Very similar Stoke action on the XLK is to what we're seeing on the Dow Jones, on the S&P 500. Price action really, really good. Bullish Q reversal bar. Volume was excellent. Daily chart. A great two-day rally. The rally came on volume. And I know I'm sounding like a doom and gloomer here, but it's great that we had a back-to-back rally, but we can't forget, obviously, valuations. And we also want to have answered. We did have a breakout on XLK, daily time frame. Do we pull back and put in higher lows and then break out to higher highs? That's what it's all about. Higher lows, higher highs. All we have right now is a short squeeze and with volume, some institutional accumulation. Not a ton of it, but it's obvious that they were in there buying. Semis. Weekly chart. Bullish Q reversal bar. Up nearly 2%. I hate the Stokes. Again, we're seeing this over and over again this week. These Stokes are in no man's land. Volume was strong. Daily chart. We were stopped at resistance at 270. We stopped at the 200-day moving average. Great volume. So all we want to see here is a pullback, a higher low. We take our crayon out. We draw our trend lines at support level. Then we look for a higher high. Then we know this rally is in all probability over. We're not ready to say that yet. Or I should say, this correction is over. We're not ready to say that yet. LABU. All right, so LABU, I'm going to kind of put our positions first here. I didn't put this in proper order. LABU, we put on a position last week. We'll go to the other positions later on in the commentary. LABU, we sold naked puts, 16 strike. That is a long trade. Are we out of the woods yet here? I'm not ready to say that. If If I were overly bullish on LABU, I would have simply bought the common shares. I'm not overly bullish. I'm optimistic, which is why I went so close to the money. And if they're put to us, they're put to us. But we get it at a discount. What I'm loving here on the daily chart is that we broke out on RSI. We have an indicator potentially leading price performance. Remember, I drew this cup with handle formation. Well, we're beginning to break out of it now. Beautiful rally. Great volume. LABU looking really strong. Gold. All right, so gold attempted to break out. This is a monthly chart. It attempted to break out. We were rejected. We have one trading day left to go. Let me validate that. I think it's 1 day. Yeah, 1 day. Monday to break out. So it's a long shot. But ultimately, I think this is going to get resolved to the upside. RSI has already broken out. Stokes are rising. Volume's going to roll in light. There's no changing that. MACD looking really good. All right, gold weekly chart. We just saw in the monthly chart, we had some topping action, and it's reflected here on the weekly chart with a bearish reversal bar. So we're probably going to get a bit more of a retrace on gold. That's okay. Now, what I do want to point out is this. On a weekly time frame, the gold-silver index weekly chart had a breakout the prior week, pulled back, retested, and had followed through last week. So we're still seeing momentum with, frankly, silver driving the ship right now, at least in the short term. We'll go to silver in a moment. Let's wrap up gold in the daily chart. Here's the daily chart. Big bearish reversal bar. And that's okay. You saw distribution. This was a sell the news event. And folks, this is an opportunity. XLE, this to me looks as though we're probably going to continue up higher here. There are some signals that this is potential topping action. Last week we had a filled candlestick, but we did move lower, but we reversed off the lows to ultimately close positive. But given the events over in Europe, I would have to conclude that it makes sense for energy to move up higher. And one of our watch positions for the coming week is the XOP. Those are the explorers. Daily chart. A very rough Thursday, but a gorgeous Friday. So I think that we're ultimately going to break out here on the XLE. So energy looking strong. Natural gas, surprisingly not that strong. We reversed off the highs of the week. Daily chart. We gapped down on Friday. So no compelling reason right now to put on a trade on oil. Down volume was light. Oil reversed off the highs of the week last week. We're up on volume. Ultimate oscillator, lower highs here. We may be rolling over here a little bit, which is surprising. It's really surprising to me. Again, citing the events over in Europe. It could be just a simple sell the news event and short-lived. Yeah, here's your blow off, and then you pulled back. Maybe we'll just enter a consolidation phase. I can't see a big drop-off in oil prices, but it looks a bit tired. Volume, pretty heavy. Emerging markets. Now, I've been bearish on emerging markets, and as the chart implies, rightly so. That's going to begin to change some, I think, because remember, emerging markets usually trade inversely of the U.S. dollar. Remember the price action on the U.S. dollar. Let's go back to it. Here we go. Pretty bearish. All right, so are we breaking down? Could be. If we are, then we want to look at emerging markets. Now, we didn't close positive last week. RSI remains in a trading range, as do our Stokes, but we are putting in higher lows. Down volume was light. Let's go to a daily chart. Daily chart, nice back-to-back rally, filling the gap. Do we pull back? Do we put in a higher low? And do we break out to new higher highs? Those are the questions that need to get answered. But if the dollar weakens up, we just may sell naked puts on the EDC and generate some cash flow and perhaps have them put to us. Bitcoin. Let's update this because it's live on a Saturday. We are down slightly. Let's go to a weekly chart. All right, so we rallied off the lows of the week. Are we going to put in a higher low? That's the question that's got to get answered. Now, I'll give you a sneak peek as to what I was talking about on the TrendSpider presentation. Bitcoin correlates very, very well with risk assets, particularly growth stocks. But it also correlates very, very well with the CPI, the Consumer Price Index. So right now, Bitcoin is selling off with risk assets. But once traders realize the Federal Reserve is full of hot air and they realize the economy's slowing and they're not going to be as aggressive with these rate hikes to fight inflation, well, traders are going to look towards Bitcoin as an inflation hedge, especially if the US dollar tanks. Let's go to our positions. We already went over LABU. Nugget, believe it or not, closed down last week. But it's okay. We broke out the prior week. We retested last week. It held. We may bounce around here a bit more. We sold naked puts, 49 strike. We're up on that trade by over 50% now. I may roll the trade up depending upon price action. I love the Stokes, higher lows and higher highs. Daily chart. The daily chart, we pulled back on Friday. We retested the 200 period moving average and we flashed a bullish reversal bar. That's some seriously bullish stuff, especially after this big sell-off on Friday. Volume, very strong. So Nugget looking rock solid. Really, really, really good. Gold money closed down on the week. MACD went positive. I think we could add more here very soon. Daily chart. Yeah, RSI hooking up. Stokes look poised to flatten out. Beautiful bullish reversal bar on Friday. I like it. We will probably be adding more very soon. The silver miners. Weekly chart. Closed up 1%, more than 1%. We closed off the highs of the week. That's okay. We had the sell the news event. Volume rose sequentially. Daily chart. Daily chart looks healthy. Potential and probable double bottom setup on RSI. Stokes appear to be flattening out. Bullish reversal bar on price. Good stuff. We love it. We'll remain long. Silver. We're using the ProShares Ultra Silver Fund. We broke out last week. Yes, we closed off the highs of the week, but we held the breakout. Expect the retest this coming week. Loving the higher lows on Stokes. Daily chart. Bullish key reversal bar. We were stopped at resistance, though. We were up on volume. Really good stuff. OPTT, our renewable play on energy, broke out last week. RSI looking awesome. Stokes looking awesome. That was volume. Volume was light. Daily chart. Beautiful daily chart. Look at these stair-step higher on RSI. Stokes broke out. Price broke out. We're going to get resistance at the declining 50-period moving average on any pullback, perhaps down to 1.20. We add more. Cal-Maine Foods, an awesome week. We were up over 3 1/3% last week. A little bit of topping action at resistance. New 52-week highs. For that matter, new multi-year highs. It's very volatile. I would not chase it. Daily chart. Yeah, definitely do not chase. Look at the topping action. Allow for a pullback perhaps as low as $43 per share. And then you could step up to the plate and entertain a position. Ultimate oscillator, lower highs. We may get some weakness here. Stokes potentially rolling over. Caution, caution, caution. This is an investment for us. It's not a swing trade. So I don't want to lose my position. So I'm going to stick with it. Why? Take a look at the monthly chart. Here's your breakout in a monthly time frame. Let's get even wonkier, even more nerdy. Let's go back to a quarterly chart. Look at the breakout here. Nothing not to like. This is going up higher. Look at these tight Bollinger Bands. The upper band is in the high 50s on the Bollingers. Actually, I'm going to retract that. It's in the low 50s. It's at around 51, as noted here. These numbers all crunched together. It was hard to tell. PayPal, weekly chart. A really great trade. We still have a position. Next resistance level is at around 111, 112, then 120. RSI remains oversold on a weekly time frame. Daily chart. Stokes, beautiful. RSI, beautiful. Price action, beautiful. We're going to look to book profits ultimately and bail on this trade as we near the declining 20-period moving average. That's the game plan. Volume heavy. Great chart. I may even sell some puts, naked puts, and generate some cash flow here, perhaps at around 105. I like that strike. Moving on to focus stocks. ITA. This is the U.S. Aerospace and Defense ETF. Folks, we're entering a new Cold War. You have the alliance of Russia and China. NATO thought that word salad and threats were going to intimidate the Russians. That's obviously not the case. They're woefully unprepared for a major conflict. They need to load up on weaponry. Got to look at ITA. So ITA looking very good. A very strong flag formation. This is a continuation pattern. I think we're breaking out probably this coming week. RSI has already broken out. We're up on volume. Daily chart. We broke out on a daily time frame. It is optionable. So this is one we could be long of shortly. I just want to price out the options because I'd love to sell covered calls on this as well. Fastly, weekly chart. I did a video a while ago on Fastly on YouTube, and I was bearish on it back then. And man, has this thing gotten beat up. This is a cloud play. We are back down to the pre-COVID lows, or I should say the trading range that it was in. So all of this, and this is what I expect for many, many names in technology, is that all of these COVID gains are going to get given back. So Fastly now becomes interesting. I wouldn't trade Strangles on it because this is a stock that can get bought out. And God forbid you have a naked call position on, you have your face ripped off. So I would not do a Strangle trade on Fastly. Daily chart. Daily chart. Big reversal bar on Thursday. Somewhat of a reversal bar on Friday. They just couldn't close it positive. But I do think we're going to rally here. MLPX, Global Energy Infrastructure. This is in keeping with what is going on over in Europe. Energy is a key component of why you're not seeing more destruction, because if they destroy those pipelines, Europe is in a ton of trouble. They're overly reliant upon Russia. Even we import millions upon millions of barrels of oil from Russia every single year. This has to change. So weekly chart, big bullish reversal bar. Volume was light. That's not good, but I still like the price action. Daily chart, beautiful breakout on Friday. Volume was light though, right? So no rush to go jumping in here. We want to wait for the weekly breakout. But MLPX is a great sector to watch. Another, I don't think we would trade both of these, XOP and MLPX. We'll choose one. And XOP looking very good. This is the S&P 500 oil and gas exploration and production ETF. They're going to have to drill, folks. Fracking needs to come back. Biden will fight it, but it's going to need to come back. It's a national security issue. We have an inverted head and shoulder setup, left shoulder, head, right shoulder. We have broken out. This is a continuation breakout setting up, daily chart. This is a very bullish chart. This is a bull flag setup. I've spoken enough lately about bear flag setups. This is the exact opposite. This is a continuation breakout pattern. Can't be ignored. So I think that we're breaking out higher on XOP. It is optionable. Lastly, IDX. IDX is the Indonesia ETF. I spoke about this last week. I expected a breakout. We got the breakout. Bullish reversal bar. Indicators looking rock solid. Volume very strong. It's under accumulation, institutional accumulation. Daily chart. We broke out on Friday. It's game on IDX. Unfortunately, it is not optionable. I'll validate that. Sometimes stockcharts.com is wrong about optionality. RSI broke out, validating the breakout on price. IDX looking good. Folks, with that, I'm going to say everybody have an awesome remainder of your weekend. I will chat with you on Sunday Night Futures Live. And don't forget, catch me on Contrarian TV, 12 noon today. There will be a bunch of other great speakers as well. And I will include the link in the email and below the video player that you're watching right now. Until tomorrow night, everybody be well.